President Biden released his long-awaited executive order on cryptocurrencies on March 9, which was widely anticipated. And the crypto sphere responded in a relieved manner. Faryar Shirzad, the policy leader of Coinbase, as well as other crypto experts, including Ripple CEO Brad Garlinghouse, expressed their support for the move publicly. But why? Well, because the verdict was positive to the market, and it did in fact result in an 8.4% increase in the price of Bitcoin on the same day. And you know what they say, when Bitcoin rises, all other cryptos are on the way to rise too. So, what exactly did President Biden say? And what does this mean for the future of XRP? Stay tuned till the end of the video to find out. Welcome back, XRP Army. Let's grow the XRP Lab community by pressing the like button and subscribing to this channel to stay updated at all times. There is a lot to appreciate, or at the very least to tolerate, in this executive order. Consumers and investors will be effectively protected as a result of this legislation. As is the case for you, consumer protection is a primary issue for every mainstream crypto enthusiast, including yourself. Fraudulent initial coin offerings, ICOs, and other tactics to deceive investors are strongly discouraged by all legitimate cryptocurrency firms. Because no legitimate cryptocurrency firm wants to see its clients taken advantage of by fake initial coin offerings, ICOs, or other scams. It also seeks to minimize the risks of illicit finance and national security threats presented by the exploitation of digital assets for illegal purposes. This is a really sensible proposal because there are a variety of illegal items that may be purchased anonymously using browsers such as Tor that represent a threat to national security. Another provision states that the United States should promote U.S. leadership in technology and economic competitiveness in order to reinforce U.S. leadership in the global financial system. Following the passage of this clause, there should be a greater emphasis on the development of cryptocurrency-related jobs in the United States. Utilizing the great majority of crypto-related job opportunities and growing the economy is an excellent opportunity for the government to achieve its economic goals. Although this is feasible, it is only possible if the limits are not overly tight, and the laws are clear and fair. It is also only possible if the government actively uses its assets and resources to recruit crypto companies to the nation. But unfortunately, the US government has a poor track record in this area. The EO's final goal is to promote equal access to secure and affordable financial services, which is a commendable objective. There is no one in the cryptocurrency world who believes that the present state of the United States financial system is understandable, affordable, or fair for consumers and companies. The very existence of cryptography is a rebuke to the status quo as it currently exists. The underbanked and underrepresented already rely on cryptocurrency to a higher extent than the fully banked, and the crypto community should do everything it can to enhance access and equity in the industry as a whole. So, what does all this mean for XRP, and what do you think the future holds for Ripple? Well, the predictions for the price of XRP for this year are more optimistic than those for the price of XRP in 2021. The price of 86 cents per share seems to be relatively average for the year 2022, although it is conceivable that this may climb or fall depending on how swiftly the Securities and Exchange Commission, SEC, releases an update. The Ripple network is run by the Ripple Protocol Consensus algorithm, which is developed by Ripple. It does not use the well-known proof-of-work or proof-of-stake systems. Instead, the Ripple transaction protocol makes use of a number of independent nodes to ensure that the accounts and transactions in the ecosystem are consistently validated. Only transactions that have been verified by all of the nodes in the network are permitted to be completed. The approach is able to prevent double expenditure by ascertaining the majority opinion through the use of surveys. Double spending refers to the possibility of a digital currency being spent more than once. As a result of the ease with which digital information may be reproduced by knowledgeable persons who are familiar with the blockchain network and the computational power necessary to change it, it is a potential problem that is unique to cryptocurrency. And the President's EO seeks to enhance solutions for such risks. The Ripple system is structured in a way that it will not allow you to spend the same number of coins twice or more than once because it will identify and remove all subsequent transactions because it will detect the initial transaction and erase all others. Transaction time is maintained to a bare minimum due to the lightning-fast validation provided by this consensus mechanism, which completes transactions in an average of 4 seconds. The Ripple protocol makes use of gateways to communicate with other systems. Two parties must first develop trust with one another before they can perform a transaction, and the gateway is a link in that trust-building chain. Banks are frequently utilized as entrance points into the financial system, and in many ways, the structure of Ripple is similar to that of the SWIFT global quick payment system. For several years following its launch, the value of the XRP cryptocurrency was so low that it was almost worthless. It was only in 2017 that the asset's value surpassed 1 cent as a result of greater media coverage of the situation. It also took advantage of the excellent growth experienced by the cryptocurrency sector that year. By April 2017, the price of XRP had risen to 5 cents, and the steady increase continued until it hit 25 cents in May 2017. And due to the fact that the XRP coin had acquired popularity among cryptocurrency investors, who had recognized its value and potential, it was aimed to shoot high after that point. Over the course of 2017 and into 2018, the asset's value progressively increased, hitting a record high of $3.84 at the start of 2018. However, in only a short period of time thereafter, the value of all other cryptocurrencies plummeted. The price of XRP stayed constant at roughly 30 cents by the end of the year, and it never rose beyond 50 cents during the course of the year. The rise in the value of the XRP currency exchange rate was later a result of the optimistic growth forecast for 2020, which began at the end of the year 2019. By the end of the year, the token's value had climbed to 80 cents per token. The beginning of 2020 was intended to be a continuation of the rise in the value of XRP, but this was not achievable as a result of the SEC's lawsuit against the token. Following the revelation, some cryptocurrency exchanges withdrew XRP from their websites. Many others who had the money also sold it as a result of the panic. Later on, the price of XRP continued to progressively decline, eventually reaching $0.166. In contrast, the price of XRP has risen to $0.755 once more. Ripple is now trading in the range of 70 cents to 90 cents per Ripple unit. The recent high volatility of XRP is evident in this research, making it difficult to make predictions about the future of Ripple. However, despite the present volatility, analysts are still able to make predictions about XRP. This simply implies that these estimates are vulnerable to change based on even the tiniest changes in the real world of the market. But they do give a rough notion of what to expect from the Ripple rate in the long run. There are a variety of reasons that might have an influence on the XRP to the USD exchange rate in addition to overall crypto market fluctuations. And due in part to its partnerships with well-known companies, XRP has gained popularity and increased in value since its launch in 2012. And as it is proven, increasing the number of relationships you have will result in more social acceptance, which will, in turn, result in a higher monetary worth for your company. In contrast, XRP is not as basic as it appears to be. The lawsuit filed by the SEC has further complicated matters. It is true that the XRP estimates were strong prior to the SEC filing the case, but they did not inspire confidence. However, the lawsuit stalls Ripple's growth and makes it more difficult to predict its price trajectory, allowing Ripple to profit from the developing cryptocurrency market while the litigation is pending. But because of the extreme volatility of the cryptocurrency market, forecasting the performance of digital assets such as XRP is significantly more difficult. It is feasible that XRP may reach a record high of more than $3 per token by 2022, setting a new high for cryptocurrency. Some of the world's largest financial institutions have publicly supported the Ripple price, and a bevy of collaborative ventures and events with cryptocurrency companies suggests that many people have confidence in the cryptocurrency. In contrast to other major currencies such as Bitcoin and Ethereum, the current XRP price estimates and price movement may indicate a big improvement by the end of the year, and it may even surpass its previous all-time high price of $3.84 by the end of the year. But in line with expectations, the price of the Ripple digital coin will continue to grow steadily from mid-April and might reach $1 by the end of August. However, the value of the XRP coin might fluctuate throughout the year, based on the outcome of the legal cases brought against Ripple and the effectiveness of such activities. Make sure to subscribe and give us a thumbs up. Thank you so much for watching. See you in the next video. Kindly note that the prices of cryptocurrencies frequently change, so by the time you watch this video, it might have changed to a whole new value. The information provided in this video does not constitute investment advice, financial advice, trading advice, or any other sort of advice, and you should not treat any of the content as such. The content in this video is for educational purposes only and hence should not be considered financial advice. Do conduct your due diligence and consult your financial advisor before making any investment decisions.